All right, YouTube family, what's the vibes? How you guys doing? I hope you're doing fine. Today I'm going to be really talking about something very interesting. We had a massive and exciting week last week, or this current week that just passed, and I just thought to share a concept that was very prevalent in the market. And it's something I've also talked about, in some of my videos, but I just wanted to shed more light into it. And it is market maker models. Market maker models, right? And you probably have heard it, right? Especially if you study ICT or you watch institutional concepts, you'd have heard, buy model, sell model. And the truth about this is, in my view, there's a core principle that governs every space, that governs everything that you can see working. There is something that it runs by. There's an algorithm that controls anything that works. There's a system that it runs by. It's the reason why, we're able to understand trading and actually make money from it, even though it can be quite uncertain. It's because regardless of what happens, there's still a system, to which it runs by. Now, if you understand market maker models, things will change for your trading for sure. You'd start to see the market, a little bit more clearer. You start to just have clarity basically. And the reason why I like market maker models is it allows you see price on the longer term. So let's dive in. Let's see how things go. Right. So we'll look at this theory and we'll then go and look at what price played out last week on gold as an example. And I would leave you to go and, do due diligence on finding it in old and past price action on your particular pair and see how all of that wakes up. Now, I have here the understanding of key levels bring precision to when we can expect a major turning point in price. We see key levels on the higher time frame. Now, I talk about key levels a lot and I try to break it into four, right? Old highs, old lows, blocks. Now, blocks would be your order blocks, mitigation blocks, propulsion blocks, whatever blocks you understand, right? Levels that some people would call support and resistance, all of that, right? And fair value gaps or inefficiencies, that would be the fourth one. So old highs one, old lows two, blocks three, and inefficiencies would be four. Here I have them just split it out like gap blocks, old highs, old lows, fair value gap. Right, these are key levels. I like to look for these levels on the higher time frame. So when price is picking out on a monthly high, I'm paying attention because there's a possible reversal or retracement going to happen. When price is taking out Asia's high, I'm looking for a possible reversal on or retracement going to happen. So I just showed you that diversity in multi time frames or in different time frames. So the monthly time frame for a very large time frame, right? I can expect a deeper pullback, and the Asia's high for just a daily movement to happen, which is one of the systems I've also taught in the past month, right, or in the past few months, where I've said, price takes out Asia's high, we can be looking for sales on the day. Price takes out Asia's low, we can be looking for buys on the day. And it's just the concept of key levels, which would be old highs, old lows. So if you understand this, then we can go on to understanding, what a market maker buyer model is. We would see movement into key levels or away from it. Now, what you want to think about is price moves from key level to key level. So you would notice that every time in price, there is always this V shape and this N shape. It's a continuous V shape to N shape because price is only bullish to bearish, bearish to bullish. Now, your job as a trader to be profitable is to be able to figure out when does it flip to bullish. The reason why you take losses sometimes is because when it's in the middle of or when it's in the process of flipping to bullish, you are still on the term of expecting continuous bearishness. And there's nothing wrong with that. What you call bearish order block would fail when price is about to switch. What you call bullish order block would fail when price is about to switch. So it's okay. But the good thing is if you can figure out that, oh, this is a valid bullish order block and it fails, then now I can actually engage price for the next directional bias or for the next direction it's going to move into. So the way you want to think about buy models, because I want to make it very simple, is think about key level to key level because that's how price works. When you go on the higher time frame and you're looking for, oh, what is the week going to play out? What you should seek for is where are these key levels represented in the charts? Are we currently moving from a key level or are we approaching a key level? And that just set things up for you. And we're going to go into the charts and see, stuff, right? Every time you see price from a point expand into a level and then expand higher, you have just seen a buy model. And until you scale down to the lower time frame, you might not know. But every time you see price just run lower and then run higher to take out, that particular high. So if we see a bearish candle and then a bullish candle that follows it, that's a buy model. When we see a bullish candle and a bearish candle that follows it, that's a sell model. And I'll break it down to you as we go. Right. In a buy model, we would see price move from accumulation phase to distribution phase. Let me give you a concept that would make you understand this properly. A buy model is just an expressive study of your power of three. Your power of three is just an expressive study of how a candle forms. So the way a bullish candle will form, it's going to open, run lower, expand higher, close. That's your buy model to it is original consolidation, run into key level, expand higher, close, right? It's the same thing with your power of three. It's your consolidation, manipulation, expansion, close. If you start to get the idea, you would see that everything has something in common. We just have ways that we explain it so that we get it properly. It's the same thing with if I'm going to be buying, I need to be buying in discount. So it's not like price is spread out across so many things. There are so many ways to explain one thing. That's why you'd see different people trade different strategies and still make money. Because if you can understand the core principle, like I said in the beginning, you are able to then, play the game properly. All right. So this is a buy model, and the way it works is price would originally form or would have an original consolidation. So we see price, just dance around with equal highs above it, and the next thing we see is a breaking market structure. Right. Retailers or retail education will call this support level, right? Or resistance level. And the breaking market structure for us is confirmation that price is ready to start to move in a direction, right? Before you think about price moving in any direction, before you think about selling, all you want to think about is there a breaking market structure first? Because breaking market structure is giving you an indication that there's pressure moving into sell side. So we have breaking market structure, price returns back into the range. This is going to be low risk sell. This could be breaker, mitigation block, or even bearish order blocks, right? And we can have multiple phases of the accumulation phase. So for a buy model, the left side of the chart is going to be accumulation phase, right? Where price is accumulating, sell orders for then potential buys to come in. Buy model means we are finally going to start to go into the buys, right? So there are two ways to engage this. So let me finish this, right? So in this accumulation phase, we can have multiple accumulation phases. Like you can see, we have low risk scale. That's one accumulation phase. This is another accumulation phase, just price breaking market structure and then returning back inside of here. Now, the question is, how many accumulation phases should I expect? The truth about that is it can be as many as possible. What you want to think about is when I find the original consolidation, I need to look for something. I need to look for the higher time frame key level. I need to mark that out on my chart. It's going to be on the higher time frame, weekly, daily, monthly, 4 hour. You mark that down. That could be a bearish order block, old weekly low, old daily low, something, along the lines of this that you regard as your point of interest or your key level or your higher time frame reference point, right? And that's what you want to mark down. So until price gets there, every return back into premium will be sold into. Those will be opportunities to get into a trade. So as price is returning back there, old lows is going to send price returning back lower. Now, what happens when price is about to enter here, which is the interesting part? There's something called smart money reversal. This is when price actually switches from bearish to bullish. It's the important part of this. Now, the way it works is when you're looking for smart money reversal, I will just give it to you very, very easy. Listen to this and you write it down. Every time a smart money reversal is happening, you would see a power of three pattern playing out. So this is the key level, and before that key level, we see a consolidation, and then price drives heavily into the key level. You are having a smart money reversal pump already. That's what smart money reversal is, but it's not done. The moment price enters that key level, what we want to see is we want to see price have a displacement. Again, one of the rules I use for my trading, right, has made me see, crazy amount of success is the moment price enters a key level and I realize that it's a key level, I don't just go in there and trade it. I do one thing next. I wait for a breaking market structure. I wait for a displacement away from that level in the direction that I want to see price go. everything you are looking for is in the domain of something you already have. What that means is if you already have an expansion, you can expect an expansion. And if you look through price and engage the markets properly, you would see if you can trace what happens before an expansion and how expansions work, you'll be able to trace commonalities among how to actually get into expansions. This is just, laws. But power of three is going to be what smart money reversal is. But remember, the power of three needs to be that run has to go into that key level. So it has to go to take out those old lows, those old weekly lows, or goes into that bullish fair value gap on the daily time frame, or goes to take out that bullish fair value gap on the daily time frame or weekly time frame or monthly time frame. And then from that level, boom, expands expands in such a way that it breaks market structure. So this is going to be your breaking market structure, and then we can start to buy breaker, and then the next phase starts. The next phase is distribution. So the buy model and sell model, or the buy model, let's start from there, is accumulation phase to what? Distribution phase. This is going to be your best buy. There are going to be more buys along the way. How much can it buy going higher? One depends on the time frame, depends on how subjective you are looking at price. You could be on the monthly time frame and it's doing two expansions here, and you break it down to 5 15 minutes, you're seeing multiple return back into discounts, and price is just completing until we get back to this original consolidation. So how this helps you, which is what I want to let you know, is you can use this to actually frame your weekly bias. Remember, if a weekly candle is going to be bullish, it's going to open and go lower first. Do you remember what I said? The idea of buy model is also the idea of your candle forming. It's also how a bullish candle forms. It's also how power of three forms. So a bullish candle opens and goes lower. That run lower is not just going lower, but going into a higher time frame level. That higher time frame level is one of these things here on the higher time frame. So, if you can think properly and look through this, you'd start to see that your weeks play out like this. Price starts out moving in one direction, right? And going into the middle of the week, it changes. What happens when price is moving in this direction? There would be influx and influence of selling decisions in here, and there will be traders wanting to hold price go lower, and it changes. This is the dynamics of the market, manipulation to distribution. Let's go back and just look at this week very quickly, because that is really, where all of the sources, as you know, I'm a very practical guy. I want to, really, really get into the charts. So let's even start from the daily time frame. I'm going to be looking at gold, not silver. We're going to be looking at gold, not silver. All right. So if we look at the daily time frame, what we can see is, I said every time price does that V formation, we've had a buy model play out. Now you might not really see it as we've just looked at it here, because again we're on the higher time frame. But what you want to think about is when the price starts going lower here, it was after we took out the daily high into a fair value gap. So key level. Where the price starts buying from here, it was when we returned back into the midpoint of this bullish order block. Down close candle expansion to the upside, returns back into it, expands. So you can see that price moves from key level to key level. But now let's break it down. Let's break it down. So I'm going to take out all the drawings so that we can actually have, good stuff here. So if we look at this current week, what we would find, look at this very carefully, is when the week opened here, right? And what did the week do first? Because it's a bullish week, we can tell that the week opened and ran lower first. If you don't believe that, when we go down into the lower time frame, we would see that that's exactly in fact what happened. So weekly open. That means this is our higher time frame key level. HTF key level, right? This is our key level here. So let's go into the 15 minutes and look at this very carefully, because we said we can use this to actually get our weekly time frame. Now, if you watched my video on Tuesday where I talked about gold rally, the title of that video is Gold Rally, and we can see from Tuesday up until now what happened. Price just rallied excessively in the Discord. Profits were being made every single day from Tuesday going into Friday. And it was interesting. It was a very interesting week. And that's why, I said to do this video again. So if we look at this, right? And we go back to Monday. We just trace it back to Monday and say, oh, okay, what exactly was happening on Monday? This was Monday. So as we opened on Monday, we opened somewhere around, here, we opened here on Monday, right? That gap down is where we opened. And what happens from that gap down? Price starts to go lower. So price starts to go lower, right? And what can we tell? The only thing we were going to do when we are doing our weekend review, which I suppose you do your weekend reviews every single time. The best time to look at the charts is when it's not moving, because you are not of the opinion to want to make money. You are actually of the opinion to want to make an analysis, and there you see things clearly. So as the week starts, you would have marked out that old lows, that old weekly low as a level or as a key level, right? And as price starts to run on Monday, this was a bank holiday, but look at what price does. On Monday, what happens? Again, original consolidation. Just look at this. Follow me with me. Original consolidation, right? That's a consolidation happening up there. And what happens? Breaking market structure, showing that, oh, okay, we're actually seeing sell side. Price returns back into the range, bearish OB, low risk sell. This sell starts from Monday. You would see me on Monday morning telling you we can sell this, right? But because of the bank holiday, we would let it go. We would wait until price breaks here and would have another sales here. Did we have those sales? Yes, those sales came in. This is mitigation block here, right? Old lows run, breaks lower, price returns back, expands. So what is happening here? Price is going down into the key level. So it's the key level that decides what day of the week we form the low. That's why you would see sometimes price will return and form a Monday low of the week. I've had that question. May, how do you know is Monday low of the week, Tuesday low of the week, Wednesday? I don't know. All I know is I have a key level here, and the day that price gets into that level and what follows is a displacement, that is when I know that, that's the low of the week. So it's not black and white to say, oh, today is going to be Tuesday low of the week. Now I can speculate it ahead of time, but what if price doesn't get there? Maybe consolidates on Tuesday and it's Wednesday that it gets there. Then it's going to be Wednesday low of the week. So we see going into Tuesday, we saw price expand into that key level. Now, what happens after price expands into that key level? It expands higher, right? Is there a clear breaking market structure that you can see in here, right? Yes, price kinds of displays, but is there a breaking market structure? Well, maybe here you can say, oh, we had a breaking market structure here after price takes out that low. Yep. We had a breaking market structure here. So price was returning back. Where was this time? This time is 8 o'clock. Yes, inside of New York session, but not New York session that I've taught you to look at. When you're thinking about New York session to trade these asset classes, think from 8:30 and above, right? This is when your news release comes in many times. This is when, true move happens. Just by experience, I'm giving you that. Go back and check, and you would see, this is viable. So yes, we had a breaking market structure. So let's say you take this trader and took a loss. What happens again? Price breaks lower again to take out this low. There's a concept here playing out that's called three Indian patterns, where price will take out multiple lows before going higher, right? So we already know that the idea of price many times is it forms a low, takes out that low and expand. We call that institutional manipulations. The idea of open low, high close, consolidation, manipulation, distribution, that an old low is going to be taken out before price reverses, right? There's another layer of it called three Indian patterns. The price will take out the old low and then rerun that former low. So we have one low, two low, three lows before it then starts to go, right? It's a very, very solid pattern. And what you just need to look for is after that second low is being taken out and we form the third low, the same thing. We wait for a breaking mark structure. Right. So where did I have my buys on Tuesday? Here. I had it right down here. Bullish order block down here. Why? Because we've just had a break in market structure after price has taken out old lows inside of a higher time frame level, previous week's low. So if you think about the weekly framework, how would a bullish candle form? It is going to open, run lower, expand higher, close. That's the framework we already have. And the idea of prices, it's telling a story. So if you can understand the first part of the story, then you can join in on the second part of the story. If you know a story and I have a story, and I'm explaining the story to somebody, you can finish up the story if I'm not available to finish up that story, because we both know the story. The story of price buy side, right, is open, run lower, expand higher. If I did nothing Monday and Tuesday, I can still engage price for Wednesday, Thursday, Friday. Why? Because I know the story. The story is it opens, runs lower, expand higher, close. So do I need to do I need to get engaged in this? No, I can actually wait for this and engage this. So there are two types of traders. There are traders that can watch for this level and say this is a key level and they sell into that level. Now, there are the other traders that can wait and trade this level. Now, this one is going to be much more interesting because this is the true move for a buy model is again, as you can see, buy model. So this is the true move happening. The accumulation phase is what's happening here, which is always a shorter move. It's an expansion, but a shorter expansion to the distribution phase. So what happens from here? Price breaks market structure. Like I said before, when price is going to put in that smart money reversal, so this is going to be original consolidation, original consolidation, and this is going to be smart money reversal, SMT reversal, and that's going to be distribution. If you've been following the Discord, there were so many buyer models. I'm showing you on the weekly framework, but if you think about it, this is original consolidation, manipulation, and as soon as we take out high, that is another smaller buyer model inside of this larger one. There is another smaller one inside of here. There is another smaller one inside of here. There's another smaller one inside of here. So if you can understand the concepts, then you can just break it down and actually just find yourself in it. So I said in smart money reversal, we're going to see consolidation, manipulation, distribution. You are looking for a power of three where price is expanding into the key level, breaks market structure, and then you can figure out the trade, right? In this case, I was using bullish order blocks for entries, and it just continues like that. Price starts to use what? Old highs, right? As support going higher and using up close candles, sending price. Where is price heading on to? Original consolidation. Right. So you see what? Higher highs, higher lows. You see price fail to return back to lows. So many people would have asked the question, why did price not take out Asia's high, Asia's low this week? In a trending market, old lows do not get taken out. Not ultimately, but you would most likely not see lows or liquidity get taken out. You would see many of other blocks, internal range liquidity get run into, and as prices returning back into those ranges, right, price is being bought into for buy side. So that continues and continues inside of buy side. Did you understand this? Did you understand this? Right. So it's the same exact thing for sell model. I'm going to show you sell model right quickly. Like I said, the moment you can see it, you can't see it anymore. Right. This is original consolidation here. I like to use the U formation for original consolidation. What I mean by U formation is every time you can't understand what price did from a time to a time, that's consolidation. Right. If I look at price from 11:30 Thursday to around 18:45 on that same Thursday, what was the directional bias? I can't say. I can't say because it's run higher, run lower. Inside of that movement, it was not bullish or bearish. Like unlike here, you can tell that from here to here, price was bearish. But this was just what? Consolidating. What happens after the consolidation? Let me take you back to our notes so that you see buy model again or sell model. It's the same thing. It's a very easy concept, but you need to start to see it. So the original consolidation happens, breaking market structure again. At the return, that's where you have your low risk buy. It goes again, could consolidate, but it would have a slight return and then consolidate inside and then expand inside of the higher time frame level. How do I know that this higher time frame level works when it provides a breaking market structure? Because we can actually see price move into more levels of higher time frame. Now, let me clear out something that would be a question on your mind. It's like, what if I have a bullish fair value gap, a bearish order block on daily time frame here, and a bearish order block on the weekly time frame up here? How would I know that this bearish order block on the daily time frame is what will send price lower? Simple. As far as you are not trying to sell the bearish order block right immediately, now some people might decide to do that, but it would require more expertise to do that. If you want to get this at a higher precision, which is what I do, I don't try to be the first one out of the door. What I want to see is as soon as price gets into that bearish order block, I'm watching. Do I get a break in market structure? A break in market structure is signaling you that whatever you already identified here as a catalyst to send price lower is working. So price gets into that bearish order block, and then we disrespect bullish order block. What is that saying? It is telling you that, oh, okay, bearish order block is actually, in play here, causing sell side to come in play. So I can respect that, and you have a higher win rate doing that. Because what you're waiting for is a breaking market structure, and a breaking market structure is signaling you, it's telling you that, oh, in a bullish market structure, what we should see is higher highs, higher lows. But as soon as price gets into that key level that you had identified, right, what happens? We see price displacing and expanding and closing below what? Old lows, which is not what a bullish market structure supports. And right in there, I can then wait for a retracement and then start to sell things out. Right? So if we go back and look at that example, like I said, the moment you see it, you cannot see it again. You just keep seeing you just keep seeing it. So what happens here? Right after that consolidation, we had what? Breaking market structure. Close above order is what we will wait for. Return back into the range. Inside of the range, we look for things that we understand for buying catalyst, which is order block. In this case, price returns back into the order block, expands higher. Now if you look at this expansion, right, there are more accumulation phases. It expands above this old high, returns back again here, and then expands one more time. So we have two levels of accumulation here. We have one level here, we have another level that returns back into a higher time frame level. You know why I'm calling this a higher time frame level? It's a key level. Now, when you go into the higher time frame, you would see that, oh, there's something around here that actually makes this what? That makes this a level to think about, right? And if you know your higher time frame levels, you can also spot them on the lower time frames. Nothing is actually different. You just need to understand them. Yes, on the higher time frame, there's more strength on these key levels, right? On the lower time frames, yeah, they will work for a while and then maybe just give up. Right, but if you know them, they work, right? So that's why I can spot a buy model and sell model on a 1 minute. I just need to understand what it is. I'm spotting it here for you on the 15 minutes here. What we did before is the weekly time frame. So you can see how this can really just change things up on how you see price long term and even short term. So price gets into the key level here. What is this level going to be? SMT reversal, right? SMT reversal. SMT reversal, very straight to the point. You need to see a break in market structure. After price hits that key level, what is signaling that it's not going to keep going higher is when we start to see run below old lows, which we start to see already here. Price returns back into the range, you sell, right? Returns back here. We have another sell here from a bearish OB, right? From a bearish OB, sells off. We see another sells here for mitigation block and returns back into original consolidation. So you can see you can have a framework that allows you to look longer term. What does this do for you? You get into a trade here, you take partials here, and you can actually see if price gets down into original consolidation, what will happen to your trading? You will get less stressed trying to look for opportunities because you have runners do a lot more for you. You have runners do a lot more for you. I have GU here running, and it's still in profit currently. And it's because I have a position that I just left the runner to keep just going. Why? There is still original consolidation I'm looking at, downtime. Now, that wasn't my trade target. At my trade target, I already had 80% of the trade done. Right, this was my trade target. We shared this trade on the Discord also. If you have not joined the Discord channel, the description is going to be in the comments, right? And you're going to see that, right? Join the Discord channel. It's free. I do breakdowns here. I go deep dive into these things as it plays out live. So it's a good place to learn. So if you look at this, I already sold this last week Thursday, and by Tuesday last week, it was already done. But I'm still in the trade because why? I'm still in the trade because there's still original consolidation. Let me go into the higher time frame so that you see what I'm looking at. I'm gonna do that's just a little bit of outlook. We're ending this now. All right. Because I still have possibilities that that price could return all the way down to that low there. The price could return all the way back to that low. Why? I just viewed it as a sell model. Consolidation, accumulation, distribution. Simple. That's it. That's what I'm looking for. So I want to see price still continue down, going back into this place. And this is what is going to do. I'm holding this position, and if I get another position that leads me down here, I'm able to confidently get in and see that. And if it doesn't work, it doesn't work. Remember, there's no time that you have control on what price is going to do 100%. You make educated guesses based on systems that are proven to work. And I'm showing you one of these systems today. You might need to go back and watch this video again and again to kind of get it. But you know where the real work actually gets done? When you take away what I've just talked to you about, you have it written down on your notes and go into another separate chart and say, okay, I see consolidation here. I see consolidation here. There's a smart money reversal here, and price returns back into original consolidation. If I was trading inside of this, would I have been able to get entries? If you start to think like that, it's something that most traders don't do. But the moment you start to go down the route of putting yourself in position of, if I was here when this was happening, truthfully to how I trade, would I have been able to get into this opportunity? Because the truth is, when you think about backtesting, it is easy to actually backtest when you can see all the information. It's easy stuff to do. But the moment you start to backtest in the light of what would I really do when, if I'm the one trading this, and put your stop loss where your mind will actually put your stop loss and see if that works, then you're now doing the real work. Because when you're going to do this, price would have not played out. It would be scanty, it would look unsure until it starts to actually deliver you profits. But if you have done it repetitively, you would know that, oh yeah, this is what I should be doing now, and I just need to stick with it. All right, guys, I hope you learned something from this one. Comment, your thoughts about this. If you loved this, if you want me to do videos like this, or you just want me to do reviews, let me just know. I would like to know what you guys want so that, we can actually grow this channel to, something big. I have more and more contents coming out for you, but I like, I'm an educational guy, so I would just teach and teach and teach. But again, we're going to do more as the year permits us. We've been doing great this year. Crazy, crazy, crazy win rates that we've had this year, and I hope that we do more. Again, if you have not joined the Discord, that's a place to be. The Discord is not just for trade ideas, it is also for building growth as a man. So there are podcasts that would make you, think better and actually take action, right? We talk about stock investments also, and there's also going to be a lot more things, where to put your money when you actually make money, and all those things that actually help you grow better as a human being. It's not just a trading channel, right? It's a mind developing place. All right, guys, I'll see you in the next one, and bless up.